Hi, and welcome again to another edition of Market Analysis for today, March 1st, 2023. I am Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. Well, March can be unpredictable. Investors have endured a roller coaster start to 2023 with a rally in January offset by a pullback in February. Year to date, the S&P is up 3.4%. Historically, March has been a good month for the markets prior to 2020. The average gain for the S&P 500 in the month of March since 1980 is now 0.95% after recording the COVID-induced decline of 12.5% in 2020. As such, March is in seventh place in terms of average monthly gains, with a winning percentage of 62%. Generally, March is a quiet month on Wall Street, as the fourth quarter earnings reports are finished in February. Without profits to review, investors will be paying very close attention to economic reports, including the non-farm payrolls report next Friday, the consumer price inflation report on March 14th, and the Federal Reserve's two-day meeting. As we kick off the final month of this first quarter, equities look to be on a more positive footing following data this morning that shows China's expected economic rebound is unfolding. Counterbalancing that bright spot, however, February PMI data points continue slowing for other key countries in the global economy. Soon after stocks begin trading this morning, February manufacturing PMI data for the US will be released and is expected to remain below 50, which would mean that it's in contraction territory for the month. Any upside surprise in the data will suggest the economy is on a firmer footing than expected. However, it could also raise expectations for what the Fed may need to do in the coming months to contain the pace of the economy and specifically inflation. At the same time, a steeper than forecasted drop in the PMI data could signal a sharp decline ahead in the economy, spooking the market and earnings expectations ahead. Once again, the devil will be the details, and those details will shape how we end the first day of trading in March. So, with that being said, let's take a look at how we could probably end today. So, we see that yesterday I had said that we will be trading within the range of Friday, the body of Friday, and that's exactly what happened. Now, will that continue? Well, in technical analysis, we have a way to find out if we are entering into a tendency. And so it says that two continuous higher highs and higher lows will determine a higher tendency, and two continuous lower highs and lower lows will determine a new trend or a lower trend. And that's specifically what we've seen since Friday. We have higher lows made on Monday and another higher lows created yesterday. And today we are doing the same. So far, we will be saying that we are entering a downwards tendency. Okay, so will that continue? Let's see if that will be the case. For today, I am expecting obviously the market to continue to move higher. The 21-day moving average is very close to the high of Friday, or where this candle closed on Friday. So that will determine if we continue to push higher or not. So right now, I am speculating that we will open to the upside, receiving some of that fluctuation. So I will be buying the indices. The same token goes for the S&P 500, and the Dow has really just been the strong one to move lower. So a continuation of this movement to the downside will be expected in the Dow, and we are very closely entering the oversold territory. As far as crude oil goes, also a flattish day for crude oil, even though we have had some upward momentum early in the day, but that has been this pullback has taken all that those gainings. So we could probably see that we could probably find some footing around the 76.20 marker. So I'll be looking to buy around that area. Then we have natural gas that is really just flattish, also trading above the 21-day moving average. So let's see if that will be the case for today. Then we have gold that is looking to trade. Has been trading higher since it came closer to that 1800 marker. So 1850 is my target. I am long on gold. Then we have silver. I am long in silver, looking to come to that 2150 marker. Then we have copper. Copper is nicely moving higher. So I am is way above the 21-day moving average. I'm looking for it to come in and meet and revisit this high of 420. Then we have Bitcoin. Now $24,000 is that resistance for Bitcoin. So we could probably see that happening. And then we have the euro that is looking to trade higher, push above the 21-day moving average. The RSI is pointing higher, so that momentum will be suitable to buy, to come in long, to be long on that. Not the pound is looking to retrace, has been retracing actually, trading below the 21-day moving average. The 120 marker is our support, so we could probably find some support around that level. Then we have the US dollar index. If all of my scenario, my long positions will fluctuate if we continue to see a push lower on the dollar index, lower towards the 104, below 104. So those are my levels for today. Have a fantastic trading day, and I will see you tomorrow.